Laurits, and we'll be hearing more from you. Please take a seat, because you'll be joining us for the next upcoming panel discussion that we'll have up on stage here right now. And it's driving us into our next question as well, which is if Europe's private equity sector can provide the capital and the expertise that is needed to finance the continent's re-industrialization that we've been talking about, and meet also the ambitious growth goals on the one side, but the sustainability goals as well. So we have our panelists lined up. They may join us up here on stage. Laurits Bach Sørensen, of course, is staying with us for this one. He's joined by Andreas Pichler from the Erste Bank, who we've heard from today in the morning. Gernot Hofer as well, the CEO of Invest AG, as well as Florian Kofler, the director of PSIK Partners. And the discussion itself now will be moderated by Anna Wnuk, the managing director of the Polish Private Equity and Venture Capital Association. We have them all lined up. They'll have a fresh glass of water. Please welcome them with a round of applause, and then we'll dive right into the discussion. Thank you.
All right. Is my mic on? Yeah, I guess you can hear me now. Thank you very much. We'll try to, I guess, keep the energy, Laurits, you gave us during your presentation. Maybe to be, and we'll be a little bit more optimistic, if you allow.
That's okay.
Let's try. We've already mentioned a lot of outcomes from the report, such as Draghi report, but Letta and Weyer said exactly the same thing, but without a doubt, and this is what I keep saying to all of the administration representatives, all of the decision makers back home, that private equity is actually the real driver for European growth. And well, luckily we are supported with some big names out of Europe. So what private equity can do, of course, is support innovation, scale up the companies, be the peer to the entrepreneurs who are a little bit shy to leave the borders and grow their companies. But somehow the potential of private equity is still under leverage in many European markets, including Austria, back home also. We'll see what my panelists will say about that, but I guess we know that some of the problems are, of course, regulatory frameworks and constraints, exit environments, valuations, geopolitical trends. Nevertheless, following the European Invest Europe's Quiet Power campaign, we can definitely say that private equity is the quiet strength to back the businesses, help the economic growth, and be the real driver of the real growth led by private capital. So let's try to explore that statement and maybe come up with some solutions on how to translate private equity art into the promise of growth for Europe. So I think just to warm us up a little bit, I'm going to be looking two ways. You put me in the middle. In order to discuss the impact of private equity on European growth, let's see, maybe you have a definition or 2-3 points on what the actually next chapter for European growth is. So we'll definitely know what we are focusing on later on in the discussion. So maybe I'll look to my right, Andreas, if you want to start with one, maybe 2 statements as a warm-up.
Sure. Thanks, Anna. And thanks for having me on this panel. I think, first of all, I would like to say, I think this conference from the very beginning feels already a bit different than we had it in many years in the past. So I've sensed a bit the optimism and the spirit that things start to move also here in Austria, which is a very positive momentum, I think. When it comes to the next chapter of growth and private equity's role in it, I would say, I think we have a challenging situation in the European economy, as we all know, and there will definitely be sectors where investment is needed. Speak about tech and tech investment, but also, of course, we need to get our infrastructure up and running, and all of these topics, let alone corporate succession, private capital will be urgently needed. I think what's a bit counterintuitive to me in the earlier panel, or last panel here, is that we speak a lot about public money. In my feeling, I think we should speak also a lot about private initiatives, private money here. And so I'm happy that we also have representatives of the private money and venture capital and private equity industry here on stage. So I think this is a very important factor. And the second point I would like to make is, in my experience, also from my banking background, I think that projects and situations that promise superior returns and superior yields to investors always found financing, both from bank side and also from investors. And I think these two gentlemen here, at least we've been working together on several different situations, are a good example for that, because if there is an Austrian situation coming to the market that promises a great development, a great story, and promising yields to the investors, then I think many different international private equity funds also line up for that, and I think this is a very encouraging sign. So we speak about public money, and this is a closing statement now, but I think we should also speak about economic policies, Standortpolitik in Austria. I think this is where we really have some catch-up potential.
Yeah, we'll definitely dig into that a little bit in a second. That will be the less optimistic part of our discussion. But you're absolutely right. I guess it will only work when the public money and the public initial initiative will drive the growth and mobilize the private capital into investments. And this is I think this is the only recipe for success. Laurits, you've already told us a few big statements on what exactly we should do and we should focus in order to use the potential of private capital in growth. But if you could develop on a few particular, let's say, sectors and scenarios based on your experience from Nordic Alpha.
Yeah, so first of all, I think the US federal budget is 35 times EU's, so we're super dependent on what happens within the different regions. And I think Europe needs to really think about catalyst capital. I think the inefficiencies in our financial ecosystem is the biggest challenge. We do have the innovations. We do have actually a fairly coherent private equity community, but there are so many things that are keeping money away from the right pockets. A good example, and again, the banks are super limited in what they can do, but there are no working capital financing for industrial companies that are not profitable, as an example. And that's keeping up conventional private equity, because you go to London and ask any private equity fund to scale up a company where they can't do debt financing on CapEx or working capital. It doesn't exist. They're all going to say you're crazy, because they can't make return on equity alone. So I think we need to think a lot about catalyst capital in order to go in and activate the muscles that we already have. I think on one side. And the other side is definitely we need to have much more tailored capabilities, as I also said. And then we need to just simply understand, that's why we introduced hybrid transformation. We need to understand what it is we are up against. Let's not try to put more money into software. I'm sorry. We need to put the money, because what is it private equity can do? What is it US are doing? How did they add $1.6 trillion to the GDP? It's because every single of those assets had private equity and a functional IPO market. Every single one of those. We have neither. So we need to really get that activation if we want to build real big companies. And here I think catalyst is one thing, and then really understanding what are the challenges of that financial journey all the way to the end.
Yeah, I'll be trying to translate it into positive. So there are initiatives from the public sector that can drive private capital. The capital is there, we just need to steer it right. So Gernot, what do you think is the next chapter that Europe has to focus to use the PE potential in growth?
From a technical perspective, it's easy to achieve growth when you find yourself in the third consecutive year of a recession. So yes, there will be growth. We ourselves, as Invest AG, we've been in the market for over 30 years now. We have done more than 230 transactions. And when I look at our own investment behavior, we have shifted away from growth. We do growth transactions, but we don't find them in the market. What is the hot topic right now? Succession finance, realigning family structures, shareholding structures. And we've never needed a single euro public money in over 30 years, because I think there's enough dry powder in the market. And there are some industries which are very interesting for us. Of course, defense industries, health tech sector, and everything which is around energy infrastructure, AI solutions, etc. That are the booming markets. Whether these markets are booming in Austria, that's the big question. I think we should rather look at CEE. This the emerging market. This is the growing market. But what can we do in Austria? We have to find investor-friendly framework when it comes to taxation and regulation. The burden of bureaucracy is rising ever more. We have a concession from the financial market authorities 1 month ago, and the level of bureaucracy has doubled since then. So we should more focus on investments in the markets rather than bureaucracy.
Okay, that was positive, I think, more of a recommendation. We know what to do. That's usually the positive. We'll dig into succession, which is actually a very important issue, and we'll dig into CEE region. I'm looking at Daniela. Please do not kill me for that, but there are a few good things for the market that I come from that will be partially talked about during this panel. But Florian, any opening statement from your side so we can dig into the case studies?
Yeah, and I'm trying to continue on the positive note that Gernot was ending on. Maybe bringing a bit of a perspective from investing into more mature companies, a little bit in contrary to what we heard so far today. So when we think about growth in Europe, we believe that this is largely driven really by the mid-market potential that we see. So really scaling up regional, mostly smaller companies up to going multinational or even becoming real European leaders and thereby increasing their competitiveness on this global stage. It's definitely a key cornerstone for us, but also developing those companies really operationally, not just backing them financially, but investing into organizational structures, systems, digitalization, especially in more traditional business models, more traditional industries in Europe, typically unlocks the scalability of those companies and then ultimately drives growth. So fundamentally, we just believe that in Europe, we have structural advantages that we can use. Europe is a very fragmented market, and there is the consolidation potential and a growth further down the line that especially private equity can use and drive.
I think we are talking about, on the European level, about generating an alpha, right? Just to competing against other larger markets, obviously. But we really need to grow that alpha out of somewhere, and maybe fragmentarization could help in that, and particular focus on different regions by private equity firms too. But I have a few myths, I guess, and just to see how private equity is doing and in realizing the tasks that it's set ahead of us. So Laurits, if you could help me to abolish one dream based on your Nordic Alpha experience. Private equity is not buy and flip. Private equity is buy and build, two different statements, but how, based on your experience on working with companies and your portfolios, how could you actually abolish that myth that we don't sell cheap, don't buy cheap, sell expensive, and that's the entire job that private equity does?
Yeah, and again, first of all, private equity is very different. Florian and I have very different models to both select technologies and how we scale up companies. So it comes to what do you want to do? Because I think if one of your companies expanded at the pace that one of our companies does, it will probably explode. So I think it comes down to the kind of model and where you're adding value. Because I think IK is one of the big players in Europe. You're really, really strong at operational optimizing the assets and doing more of that professionalization into the next levels, and then do the transaction based on us. We are a transformative investor, which means that our assets are scaling at 65% a year on average when we move in, and they're opening up a new country every 3 to 6 months. And they typically scale 1,000% on their culture, on the organization side during our leadership. So I think that requires us to be way closer in that data stream, and I think our model needs to be on the inside of the company versus on the outside of the company. So I think there's room for everybody, and there are a lot of fantastic, I think, here, especially in Germany, we're very active, and also here in Austria, we have great companies where on the succession side, the conventional PE model can drive so much value. Ensure that these become resilient, become digital, ensure they're actually able to deal with the realities of the geopolitical world. So I think there's room for everybody, but if you really want to transform the world, we need a PE model that is way more operational and needs to take a different level of risk as well in order to do that.
Okay. All right, so that's a bit of food for thought, actually, but it all turns down to a different art of value creation, right?
Absolutely.
So, but then the second myth will be a very, 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 very long time you have to wait for your returns when you're investing in private equity. So that sometimes comes, that question mark or that problem comes on top of the belief that private equity can drive impact and you can be a part of something important. So as Invest AG has a reputation of a long-term, long-horizon investment, patient capital, how do you marry those two things? So impact, that in many cases needs patient capital and returns.
As Invest AG, we operate as an evergreen fund, so I strongly recommend this business model for our competitors because it helps you to even out fluctuations in the markets. When you have a downturn, have a recession, you can simply wait 5 more years, and we do not put a lot of exit pressure on our portfolio companies. If you want to fulfill a strategy, sometimes it takes 5 to 10 years, so it's a very patient capital. And one thing is important, you have to take yourself time and you have to make buybacks affordable for our co-shareholders. To give you an example, we were invested in the company Röhrenpumpenbauer for 21 years and our co-shareholder was able to buy back our shares after 20 years, and it was a win-win situation, and for us it was a double-digit IRR. So we have to shape private equity in a way that it's not a one way towards an IPO or a total sale of the shares. We have to make buybacks affordable.
Okay. Yeah, sure, go ahead.
So, yeah, I mean, just one comment. I completely agree that the more patience, especially when you look at the complex assets. But I think part of that solution is also we need to work better across the ecosystem. So we need to be able. So one of the things that we are contemplating with the new fund, which is an early stage fund, is that actually provide exit opportunities instantly. Because if we can get de-risked asset, I'm happily paying 300%. Of what if I'd gone in 2 years earlier, just to be absolutely clear. So our money goes into global expansion and not setting up ERP, you know. So in that sense, the more we can work across that, we can actually provide a similar model because they'll believe that those type of entities, the LPs don't like them. And if we don't provide some money back, we won't get more funds. So.
But you know, I promised myself that I will be moderating, not discussing. But this is actually a signal of the developed private market, that you can have all sorts of tools that are sufficient for financing growth of the companies, but then they are flexible enough in order to attract the investors to give them liquidity, right?
Yes.
So you cannot stick only to financing this or that, economy this or that way, because problems such as problems with fundraising come, right? And then you sort of have to wake up and deliver some kinds of different private capital. Yeah. And so you have to be flexible, I guess, right? In order to be really called the growth driver. There you go.
As a rule, we only take minority participation, and we consider ourselves as a financial product. We have a majority shareholder, we have an industrial leader, and he keeps us as a shareholder as long as he wants. So not we are giving the timeline, but our co-investors, our main industrial leaders, they give us the timeline for our participation. So we consider ourselves as a financial product. We have no own strategy for buy and build an industrial portfolio, for example. So that's perhaps the difference from the P perspective.
Yeah, and this is a positive thing, right? So the private market can organize itself in a way that can fill all of the gaps of financing, different models that are needed. So let's go back to whatever I have listed here. That's usually easier when you have a time restraint, because I could discuss with those guys forever, actually. Florian, IK, private equity investor with a standard model, focused on DAC region. But so you work with portfolio companies quite extensively. You look at them, you talk to the entrepreneurs, you know the problems they have. So what are the major problems faced by the entrepreneurs of your portfolio companies in the recent times, right? That are a bit difficult, I guess.
Yeah, good question. I guess in the smaller mid-cap space where we largely invest into, we often face primary situations. So we're really talking to founders, family-run businesses, managers that own a significant share of the company they are actually running. And at a certain point in their development, they face either a challenge or at least a situation where they're looking towards a partner. And therefore partner with, for example, us as a private equity firm. And I guess the key challenges or topics they face, you can probably put that into three buckets. The first one being it's often a succession solution. So really family founder-run businesses that do not have a dedicated successor in place, but are very aware that they need an orderly transition, and not only of their shares, so going from majority shareholding to a minority shareholding, but often also in terms of the management of the company. So really doing the transition from a family-run business, from a founder-run business to external management. And I guess that's a transition where PE can play a very vital role in supporting those founders and families to actually identifying the right successor, but also giving them a chance to stay on board while at the same time taking a step back. So I think that's a solution that PE can provide. The second bucket is probably that they are looking for a partner to scale further, because many of the entrepreneurs that we are talking to developed their company quite successfully over the last 5, 10, 20 years, but then at a certain stage reach a threshold where scale becomes a different topic, and they just recognize for themselves that they probably don't have the right competences or the competences in-house to really go from, let's say, 100 employees to 200 employees, that there are different set of capabilities required to do so. And there, I guess PE has a very crucial role to play because of the extensive experience that most funds have and can bring to the table in terms of what is required in terms of organizational structures, systems to be set up, identifying but also incentivizing the right leadership talent. So also a very important part of what we do on a daily basis. And probably third and last point is buy and build strategies. We heard it a bit, but there are certain very fragmented verticals and industries that simply need a consolidation strategy in order to grow. And there are two aspects to it that are required. First is obviously capital, and the second one being also having the competence to execute those kind of strategies. And that's often not in place, especially in smaller and at mid-cap companies, and that's what PE can bring to the table.
Right. One of the senior partners in one of the largest PE funds in Poland once told me that he feels like he's running an HR agency rather than a private equity fund. So I guess this is how the human aspect and value creation story is important. So succession, it is a very big topic, and I think we can continue those discussions over the coffee and later on. But then finally, to wrap up this, let's say particular questions to each one of you, we have an LP, so from the umbrella perspective, and that's actually something that I like to read, because I'm going to bring home that message. Erste Group, of course, the largest Austrian fund of funds manager, is launching its second diversified private equity fund of funds, investing across venture capital, growth capital, and private equity, with strong focus on Central and Eastern Europe. My friends back home are going to be so happy. But if you could please tell me, so going back to the CE, as this is not only you, Andreas, who mentioned that, but Gernot also too. Does the strategy of your second fund will reflect the idea that this region is still promising growth and returns to investors like 20 years ago?
Well, Anna, there's a lot in this question now. Let me start that way. Yes, so we do have a flagship private equity product, and Erste has been investing in private equity and venture capital for many, many years already as an LP investor, and this is how we want our clients, how we want to help our clients that private markets as an asset class becomes also accessible to them because we want to apply our know-how of the sector and of the managers and offer them superior returns also. So this is the market-driven Dachfonds or fund of fund model that's already in place. So I was a bit surprised in the earlier panel that I heard a couple of times there is no fund of fund in Austria. Well, there is, and here it is. This is what we are doing. Yes, you're absolutely right. I think Erste is a clear advocate that we believe in the CE convergence story still, and I think right at the moment we see that growth rates in Central and Eastern Europe outperform Western European growth rates, and especially Austria. So we think, and we are fully convinced that this trend continues, and I think our large acquisition in your home country, Poland, that we announced recently is a clear sign of that we are not only believing in this trend, but also investing into it. And I think this is our home region. This is where we have our competencies, and this is also how we choose and select the best managers that are available in this region, and make this form of investment accessible to our clients as well and our institutional partners, and many of them are in the room as well.
So I think the last panel, whatever is happening back at home in Poland, of course, the TB initiative, fund of funds, different angles of fund of funds, your support shows that the focus from the LP perspective on using private equity venture capital as a catalyst for growth is there, despite of the region, right? But I'm very happy to look that LPs are more and more looking into that asset class. And they are more convinced that without private equity venture capital, the growth may not happen. So thank you very much for proving that and doing that for so many years as one of the flagship LPs, just to show that they are doing it, you can do that also. But definitely, so LPs are here. We have different strategies, different PE models. Definitely the statement that we can use private equity, or we should use private equity, as the catalyst for European growth. Without that, we cannot fulfill the dream of competitiveness set in front of us by the European administration. But as a final round, I would suggest if you could give us maybe this less optimistic view on the growth, and what are the actual obstacles? Maybe not to take too much time, so please just be very brief on that. What are the obstacles for private equity to actually realize the growth that is expected of us? So, Florian, I'm gonna look the other way. So, what do you think there are major obstacles for private equity in Europe to fully realize its potential?
Yeah, I think we're in the end discussing topics that are quite broadly known. So Europe is quite infamous for putting a regulatory environment in place that makes it hard to scale companies, both nationally but also across borders. So I'd say that this is one of the major obstacles, at least from our experience in day-to-day investing in the small and mid-market, to further increase growth of PE in Europe. So removing friction for SMEs with simplified compliance and taking a bit of a closer look to SMEs in particular, because it feels sometimes that this is a part of the market that doesn't have the loudest voice and doesn't have the best lobby in that regard.
I would not say we have the worst lobby ever. Daniela was here; she would not agree with you. So, no, but truly, we were not so important enough to be on the top of the agenda. So I see that back at home too. Gernot, if we realize the changes that we have to make, or the pursuit of changes that we are struggling right now, so where could we take Europe with private equity within 5 and 10 years?
We can obviously take it to another level, but we have to make people aware that private equity is a product which I can use for my own strategy. If you look, for example, at CE countries, after the fall of the Iron Curtain, there were many young entrepreneurs who were founding their business or taking public business private, and they used the funding from the West to pursue their own strategy, and they are now willing to sell and are open to capital markets. And when I look in Austria, we see family-run business whose main goal is to hand it over to the fourth generation and not letting in temporary shareholders. So we can boost it by the dry powder which is lying around. We have enough money in the market, but it's lacking the opportunities to invest and the willingness to accept private equity shareholders.
Right. Andreas, from the LP perspective, what needs to be changed in order to unlock that potential?
Well, I see two challenges ahead. One is, and we keep hearing this from our clients, both retail and institutional, so they keep asking about making private capital as an asset class more accessible. So I think there is a democratization process a bit underway, and we at Erste, we see how we can help our clients in this. I think this is an important trend in the sector, and the other one is the trend towards specialization. We see this with many managers, that nowadays managers have to be very specialized in what they are doing. For example, take subsectors like software or tech or other subsectors, and I think that this is a clear tendency I see as well for the next years. Putting those two together, I think this favors large pockets of money, and there is a certain aggregation tendency towards the large names also in the private equity industry. That is pretty obvious. And I think the counter strategy to that is, because obviously they are not the largest names, we don't have those in our home region. I think the counter strategy is we have really regional experts, regional players, and this is exactly our home turf. This is where we are playing. And this can be also a big opportunity for the future.
Yeah, I heard specialization from other big LPs, such as EIF, quite often too. Okay, just to start with bits of energy and food for thought. Laurits, I'm not going to ask you about the obstacles and restraints that may not be, after your presentation, driving you into optimistic conclusions. But if you give us maybe 2 or 3 things that you see, if we do this right, like Gernot, what can be the future for Europe rightly using private equity?
Well, it's the interconnectivity.
Okay.
We need to really understand that this is a value chain, unlike any similar business on the planet. Because we talk a lot about returns here, but we need to talk also about what it is we're creating. Because on that sense, and I truly believe, again, being a growth investor, that the problem is in the early stage. Is that we're not taking our innovation to a platform where we can lure IK into them, because they're going to say, are you utterly crazy? This is just an uncontrollable rocket. Yeah. I'm not going to touch it. So we need to have private equity methodologies and logics go into the early stage, because if we just scale up companies that doesn't have a profitable platform, or is not de-risked, nobody in the financial ecosystem will touch them. And then they can get lucky and be sold to an American company or something like that. But
do you think we can do it?
To be honest, we are doing it. And
okay.
The reason we're giving everything free, the reason we're here today is try to inspire this to be done. We're going to talk about how we believe it can be done at 4:30 today. So we believe that I think is one key. I completely agree with the whole policy side and things like that, but I don't want to talk about it because we can't change it in this room, to be honest. And then the final thing, I really believe we need to talk about catalyst capital. So we need to understand that there are certain elements that the big players in this industry, I think there was a talk about on the LP side, or from Marian's side, that if some of the big players can go in with lower return profiles in order to attract market capital, in order to go into some of the more inefficient areas, how do we actually get debt financing into high-risk investment? I know it sounds crazy, but we also can demonstrate that that's actually possible. Then IK will step into it, because you're not going to step into something you can't debt finance in your scale up. Of course not. That's not your model. So I believe there are a few things if we narrow that down, but I think the biggest one is the weak commercialization rate of our innovations. I think that is by far, because if we come out on the other side, there's lots of money to actually go into real good assets that need to scale up.
But I see that there is actually a future for that asset class because we are here, we're talking about this. I see locally that there are a lot of discussions, not just from the ones that are interested into deploying the money, such as private equity firms or venture capital firms also, but from the public officers, from all of the governmental officials, from other parts of the financial markets, such as partners in banks, right? Because they do transactions with private equity as well. So there is a big focus on actually making it work. So I believe if we continue the discussions like the ones here today, having in a panel and broader outside of the panel representatives of many parts of capital market, I think we can do it. And I wish us all of the luck in realizing the growth, the European next growth, using private equity tools. Thank you very much, to all of my fellow panelists. I had fun, so I hope that we can continue that discussion later on too. And thank you very much for listening.
Thank you.